And for a final video of the day, I'm going to head on over to the economiccollapseblog.com. Michael Snyder got a great article here. Quick look surprised. Total government and personal debt in the U.S. has now hit $41 trillion. That equates to, by the way, $329,000 per household. I can see all the households in America. Checks in the mail. Checks in the mail. You guys don't even more than half. You don't even have $500 or $1,000 in savings, like for a rainy day. You couldn't come up with $500 right now, and we owe $329,000, more than $250,000. A third of a million. Checks in the mail, baby. We are living in the greatest debt bubble in the history of the world. In 1980, total government and personal debt in the U.S. was just over the $3 trillion mark. But today it has surpassed $41 trillion. That means that it has increased by almost 14 times since Ronald Reagan was first elected president. I am searching for words to describe how completely and utterly insane this is, but I am coming up empty. We are slowly but surely committing national suicide, and yet most Americans don't even understand what is happening. Not even that they don't understand it. They don't even know it's happening. According to 720 Global, total government debt plus total personal debt in the U.S. was just over $3 trillion in 1980. That broke down to about $38,000 plus per household, and that figure represented 79% of median household income at the time. Today, total government debt plus personal debt in the U.S. has blown past the $41 trillion mark. When you break that one down, it comes to $329,000 per household. And that figure represents 584% of median household income. So it was 79% of median household income back in 1981 or 1980. Now 584% of median household income. So if we owe this much damn money, why are we paying bill? Why do we have to pay for a car payment? Why do we have to pay for a mortgage? Why do we have all this stuff? It's debt that is included in here. It can't be paid, all this stuff. If anyone can make a good argument that we are not in very serious debt trouble, I would love to hear it. And remember, the figures above don't even include corporate debt. They only include government debt on the federal, state, and local levels in all forms of personal debt. So do you have $329,000 ready to pay your share of the debt that we've accumulated? Nobody that I know could write that kind of a check. The truth is that as a nation, we are flat broke. The only way that the game can keep going is for us all to borrow increasingly larger sums of money, but of course that is not sustainable by any definition. Eventually we are going to slam into a wall and the game will be over. One of my pet peeves is the national debt. Our politicians spend money in some of the most ridiculous ways imaginable. One of my favorite is that airport that the one senator or congressman, he got that put in some pork, a spending bill or something years ago. This airport that has maybe 100 travelers a day, had an entire airport built, unbelievable. One of my pet peeves is the national debt. Our politicians spend money in some of the most ridiculous ways imaginable, and yet no matter how much we complain about it, nothing ever seems to change. For example, the U.S. military actually spends $42 million a year on Viagra. Yes, you read that correctly. $42 million of your tax money are being spent on Viagra for the U.S. military every year. And overall spending on erectile dysfunction medicines each year comes to a grand total of $84 million. Is this really where our spending on national defense should be going? We are nearly $20 trillion in debt, and yet we continue to spend money like there's no tomorrow. For much more on the exploding size of our national debt and the very serious implications that this has for our future, please see my previous article entitled, "Would you like to steal $128 million?" which I read you the other day. I didn't think that our debt bubble could ever get this big. But I didn't think that our stock market bubble could ever possibly get quite this large either. For a few moments, I would like for you to consider a list of facts about this stock market bubble that was recently published by Zero Hedge. Here's a few, 1, 2, 3, 4, 5, 6, 7, 8 bullet points. The S&P 500 cyclically adjusted price to earnings valuation has only been greater on one occasion, the late 1990s. It is currently on par with levels preceding the Great Depression. CAPE, or the cyclically adjusted price to earnings, CAPE, valuation when adjusted for the prevailing economic growth trend is more overvalued than during the late 1920s and the late 1990s. Tech bubble burst, 2000, 2001. S&P 500 price to sales ratio is at an all-time high. Total domestic corporate profits have grown at an annualized rate of 0.097% over the last 5 years. Prior to this period and since 2000, 5-year annualized profit growth was less than 7.95%. Note, period included 2 recessions. Over the last 10 years, S&P 500 corporations have returned more money to shareholders via share buybacks and dividends than they have actually earned. The top 200 S&P 500 companies have pension shortfalls totaling $382 billion. And corporations like GE spend more on share buybacks, $45 billion, than the size of their entire pension shortfall, $31 billion, which ranks as the largest in this S&P 500. Using data going back to 1987, the yield to maturity on high yield, non-investment grade debt is in the 3rd percentile. Per Prudential, as cited in the Wall Street Journal, yields on high yield debt, adjusted for defaults, are now lower than those of investment grade bonds. Currently, the yield on the Barclays High Yield Index is below the expected default rate. And finally, implied equity in U.S. Treasury volatility has been trading at the lowest levels in over 30 years, highlighting historic investor complacency. Our financial markets are far more primed for a crash than they were in 2008. The only times in our entire history that are even more comparable are the late 1920s, just before the infamous crash of 1929, and the late 1990s, just before the dot-com bubble burst. A whole lot of people out there seem to be entirely convinced that things will somehow be different this time. They seem to believe that the laws of economics no longer apply and that we will never pay a significant price for decades of exceedingly foolish decisions. Overall, the world is now $217 trillion in debt. Earlier this year, Bill Gross raised eyebrows when he said that our highly levered financial system is like a truckload of nitroglycerin on a bumpy road, end quote. And I very much agree with him. There is no way that this is going to end well. And yes, central bank manipulation may be enough to keep the party going for a little while longer, but eventually the whole thing is going to come crashing down in a disaster of unprecedented magnitude. This is what Lindsey Williams' friend Ken Fromm said a long time ago. The Federal Reserve would step in, they'd be buying these bonds, and they'd be buying stuff, but they would, and he said, he made it clear, they would only do this for some period of time, and the period of time was not known. Just that they would do this for a period of time, they would not be able to continue forever, and they would have to stop, and when they stop, it's like, musical chairs, the music stops. Except it ain't one person who's out of a chair. Whole bunch of people, whole bunch of countries. So again, let's look back at 1988, the 1988 Economist magazine cover. And do I have that just for the hell of it, just so I can put it up, just so we can kind of look at it again? I'm trying to think. Pictures, do I have it? Nope. Got the other one. Stand by, let's take a look at my desktop. Do I have it here? Pretty sure I saved that sucker. 2017. Oh yeah, 2017. That's the one with Trump. I don't. Oh yeah, here it is. Got it. I got it. Stand by. Drag it over here. Let's make that baby a little bit bigger. So you see the 10, the weird little sign Is that like a Bitcoin or a digital symbol? Like, what is that? 2018. And it says, get ready for a world currency. And you have a bunch of paper dollars, different countries, all burning on fire, with a phoenix rising from the ashes of this paper, the paper dollars. And it says, get ready for a world currency. And the year is 2018, with this big, giant gold coin around the phoenix's neck. So I've discussed this. I've talked about it. I've read the actual article that was in there in previous videos. So go ahead and get rid of that now. What is the chance that what I just read you, for example, the debt and all that stuff, and the Fed buying everything up and propping up the market, all that is happening in 2017. We're halfway through, and 2018's next year. And if that phoenix is rising from some burning dollars, I don't think that means stock markets are going to be looking great and everything's going to be great and they're going to keep propping stuff up. That's just my opinion. But, who am I? Just an old YouTuber trying to put some puzzle pieces together. Take care.